Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
It's like
safe haven currencies, correct?
Sorry?
When people get scared, that's where they go nowadays, to the yen.
Yeah. When you have falling stock markets, the yen strengthens. So if we expect further decline in the stock markets, Japanese yen will go higher, and even against the euro. So the euro will stay under pressure against the Japanese yen. But against the Canadian dollar and the Australian dollar, I think the short-term outlook is turning bullish.
Sir, one other one. Can you go back to the Australian, the AUX? And obviously, 2 years ago, the AUX was much, much higher than it is today. Where do you see AUX going? The Australian dollar, US dollar versus, so you see it going to 129?
129, yeah.
Ooh.
And maybe 137.50, but not above.
Wow, okay. So
But
that would be it.
I think will be gradual, like for UI. I think we have an acceleration because we have the validation of the double bottom pattern. So that's why we have a strong move. But now, after the slight consolidation, I expect a gradual recovery, not a strong recovery, because we have a difference regarding interest rates, and in Australia, interest rates are really higher than US. So that's why I expect a gradual recovery, and not with the slump.
Right. You don't foresee that the Australian central bank will have to actually cut rates?
Yeah. But are really higher than US. So if we have a pause on the stock markets regarding the current decline, I think each time we will see a rebound in stock market, we will see a consolidation in the AUX. So that's why I'm waiting for a gradual recovery and not a strong recovery directly to 137.50. But I think 137.50 before the end of the year is likely.
Okay, makes sense. All right, Cyril, let's go back and see if there are any other questions. Otherwise, you've done a great job, but let's just make sure that we've answered all the questions.
What is the best pair?
Trish had the question, Cyril. What's the best pair that correlates with gold?
It's a good question. I'm not sure there is a pair which is perfectly correlated with gold. Historically, maybe we can check with USD against ZAR. Which is a currency of South Africa, but I'm not sure it's very correlating, and it's complicated with gold because sometimes appears to be a safe haven investment, but now we can see that when we have a crashing or declining stock markets, the gold go lower. So it's a good question, but I have no answer for Patricia. I'm very sorry, because I'm not sure there is a pair which is very correlated with gold.
That's a good answer. Well, as you said, Cyril, I mean, I've watched it, and it seems like sometimes people buy gold for inflation reasons, reasons, and then other times they're buying it as a place to keep their capital, so a safe haven, and then obviously right now they're just crushing everything. So
Big picture on the gold is really interesting because the weekly chart, the monthly chart, and even the daily chart is strongly bullish, but I think it's a gradual move and not a skyrocket move on the gold. So I'm still bullish on gold, but gradually.
Cyril, I think that's all the time we have for today. I want to thank you. I want to give you one last moment for any closing comments, but I do want to thank you.
Thank you, Steve. And thanks for your attention. And it's always a pleasure to make this presentation, this webinar.
Cyril, you've just done a wonderful job. You've been with us numerous times, you and your colleague, Christoph, and you've been very honest. And in fact, I love the fact that you showed us your recommendations and that you didn't time it perfectly right with the Canadian or the Australian, but obviously your views are now being played out in the marketplace. So it always it reminds investors, A, that if they're watching, if they're trading Trading Central's recommendations, they need to trade them all. And secondly, timing is of course important, and you need to also have a follow-up plan. You might need to just adjust accordingly, but you've been spot on the last couple of months recommending or just advising that the US dollar might rally, and it surely has. So thank you so much, Cyril. Really appreciate it.
You're welcome. Thank you.
Thanks again, Cyril. This is Cyril Berkouk from the Trading Central. I want to thank all of you, the attendees, because you guys make it great for attending and all your questions. So please join us again next Tuesday where we have another webinar, and that will be, again, 4:30 Eastern Time. So we'll come back. Again, I just want to remind everyone that was Cyril Berkouk, and you can always go to www.fxoptions.com/FXTV to see more of the Trading Central. You can do that. Next week, May 25th, John Jagerson is going to be on with hedging with limited risk using FX options, and then Jack Crooks. Many of you know Jack, and Jack has been bearish on the euro for a good period of time. He's been spot on here also, as Cyril has, in the last 5 or 6 months. So you come and join us with Jack Crooks, The Fate of the Euro, Profiting from the Crisis on June 2nd. I want to thank all of you on the behalf of the International Securities Exchange. This is Steve Meisinger wishing you a safe and happy trading day. Take care, everyone. Bye now.
Bye. Take care.
All right. Thanks, Cyril.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.